Bluefield Solar has published annual results covering the 12-month period ended the 30th of June this year. As at the year end, the NAV was 115.83 pence. That's down from 117.01 in the previous year. We know it's been a turbulent year for a number of different reasons. But the company is in a high-profile area of renewables, and in August 2021, the fund bought a portfolio of 109 operational wind turbines for approximately £63 million. Well, James Armstrong is managing partner at Bluefield Partners, the investment advisor at the Bluefield Solar Income Fund. James, good to talk to you. Thanks for your time on this obvious busy day with your earnings out. As I said, it has been a tough year for many, many industries. Explain what's been going on in the fund this year.
Hi, Jeremy. Good to talk to you again. Yeah, it's been a very good year, actually, notwithstanding the pressures, as you say, particularly driven through COVID. This is the second time we've actually reported since the lockdown in March 2020, and we've delivered close to record earnings in the most recent results, and again a sector-leading dividend, which is on a yield of about 6.5%. So it's very attractive. So we have really shown, I think, very, very good durability and resolve during this time, and I think it shows really, as we're now 8 years old as a business, and it's showing really the maturity of the business, and also the sustainability of the model, because it's been a very, very good set of results. The challenge in terms of that you mentioned about the slight reduction in the net asset value was very marginal. That is a function really of some reductions overall really in sort of long-term power forecasts. But in terms of how we've dealt with the COVID pandemic and what the future holds, which is very positive, it's been a very good set of results.
I should, at this point, declare my interest as an investor in the Bluefield Solar Income Fund. And I know that I was asked to participate in a placing this year, and indeed I took you up on that. What is the situation now on the balance sheet about money? Where is the fund in terms of its funding for moving further into renewables?
Yeah, it's a good question, because we're in a period now where we are looking to be acquisitive, as we have been in the last 12 months. So we did some major acquisitions of solar farms, which were with regulated revenues, and then a very highly regulated revenue portfolio of wind assets. And so where we are is that we've got leverage levels which are just around about 40% to gross assets. So very sort of modestly and appropriately levered. And going forward, we will look to, the expectation is to grow by, in the future, some additional issuances of equity, but also the prudent use of debt. So you'll see that that sort of overall leverage level staying around about 40%. So that's how we'll expect to see the company grow in the future.
I mentioned the purchasing of the operational wind farm that was there, but you're obviously big as well in solar panels. What's the spread of the business now between the different sorts of renewables that you're investing in?
Well, overwhelmingly it's solar. It's the Bluefield Solar Income Fund, so that is the big focus for us, and it will continue to be so. So we have about 600 megawatts of solar assets, and we've got a further pipeline of about, which we're developing, of about 700. So not all of those, of course, Jeremy, will come through. They sometimes have some attrition there, but obviously that gives an indication of the ambition that we have going forward. But we have, in the last 12 months, broadened the mandate to be able to invest into wind assets and also storage assets. And we think they're very complementary. And you mentioned about there was a wind acquisition we made, which is called Gladiator, which is a great acquisition, really complementary to our existing solar portfolio on the basis of its geography, its generation profile, but also that it's got very high levels of regulated revenues. And Bluefield Solar is a defensive income product. And when you have very high levels of regulated revenues, they're a great way for people to earn stable defensive income. So that's why we made that acquisition. But still, the the DNA of the business is solar, and that's where we'd expect to see the vast majority of the investments going forward.
And of course, part of that push into solar or contributing to your existing output, of course, you've gone for the Yelvertoft solar farm planning consent. My understanding was that was all agreed last November, so it's within the last year we're talking about. So that's good news. Where do you go now for that? I presume you've got to set it up with all the technology now to start draining power out of that field as well.
Yeah, so that's all ready that's all consented, as you say. It's a great, that's a good move forward for the business, and that will be built in sometime expected late into 2022. And then we have a large amount of solar farms which are going through the planning. So a slightly earlier stage than Yelvertoft, they're going through the planning process. And they would expect, just in terms of timings, they are expected to sort of come through potentially in sort of 2022, and then largely until 2023 when we can start sort of building those. So it's a really important, really exciting part of the development of the company, because you and I have actually discussed this previously. One of the great characteristics of renewables is obviously the cost reduction. And so where we've got this pipeline that we're delivering, some of it we will probably use using the contracts for difference mechanisms we can, which is where you go into an auction and bid in to get some fixed price capacity for a period of 20 years, but also that we can do subsidy free. The cost of solar has reduced so much in recent years is that it's possible to make very attractive returns without the need for subsidy. And I think that's a great move forward. So that's why we're so excited about this new portfolio and this new pipeline that we're developing.
As you said, we've spoken about this before, and I know we're touching on the subjects. I know we've obviously discussed looking ahead. Obviously, at that point, when we were last talking about the Yelvertoft, so that's all now been completed. Are you getting much pushback locally from those that are objecting to these sort of developments? I talk about that in the context of what I feel now is there's more of an appetite to go down the renewable field. I get the feeling that people want to see more of these things because they know that they are good for the environment. So far as you're concerned, has the environment changed for a company like yourselves applying for planning permission to effectively change the use of these fields into renewables? Are you getting much pushback locally from people that don't want to see this sort of development?
You will always have certainly there are sensitivities, and I think as a business and also the industry has to be really thoughtful about appropriately sited solar farms, because the benefit of solar, Jeremy, is unlike some other technologies, it's very discreet. They can be hidden behind hedgerows. They don't make any noise. There's no moving parts. So they are a very sympathetic energy partner if they're near you. But nevertheless, you do need to be really conscious of and look for sites which are sensitively positioned, and there will always be issues if you're not following those rules. So, but I think your question that you pose is correct in terms of there is a real general level of support. I think the general public are broadly, there is an increasing concern about climate change. There is an increasing realization that something needs to be done, and it needs to be done quite quickly, and that the solar farms, wind farms, and other renewables are the solution and part of a very important solution, and it needs to be done fairly quickly. So I think you're right. I think generally there is really good broad support, and you also have that actually broad. That if you go to on the political level, there is very strong support. Politically, we've obviously got COP26 coming up, but also you have a very ambitious plan from the current government. They announced on yesterday, that we'd have 100% renewables by 2035. So there's certainly the ambition there politically, and I think there's a support there also from the general public.
Yeah, I was going to ask about the meeting, the conference at the end of this year, COP26, I think it is, isn't it? What do you expect to come out of that? Anything that could well change things as a sort of a nod towards your direction in terms of what you're trying to do? Do you see that there's more appetite from politicians to become involved as well?
Yeah, I think there is. I mean, I think away from Bluefield, I mean, you've got in the 10-point plan, you've got a very positive, which the government released, which is their most recent energy plan. There's a very, very positive and ambitious, based a lot around offshore wind, which is appropriate for an island. They've got a very ambitious plan. I think what needs to come out of something like COP26 is that we don't have the luxury of trying to kick the can down the road, where we say, well, we have these we should start really worrying about this, in 2030. We don't have that luxury. I think the next, all the science is pointing to the fact the coming decade is vital, Jeremy, in terms of if we are going to try and manage the climate change issue, and that means that action has to be taken now. So I think the real what we'd hope would come out of COP26 is material actions which are going to be taken now and not, say, in 10 years' time.
One final question has to be about the pricing of electricity that you're producing. Of course, we were talking, I think, very shortly after the second quarter of 2020 when power prices had dropped considerably. We've seen obviously improvement in that direction. How do you see power prices going from here on in? Do you see them rising further? I mean, clearly we've got a rise in gas prices. We're having to contend with other energy sources. Is electricity sort of moving up at the same sort of rate?
Yeah, I mean, there's a major issue at the moment in terms of the crunch. You've got record prices. This is not being driven by renewables. This is an issue around gas supplies, and so you're having, unsustainably high prices, which are causing all the well-publicized issues with the supply, some of the suppliers going bust, where it will feed into higher energy bills at some stage. So you've got there's a real challenge for governments and for the UK government to deal with this, because it is prices. We're the beneficiaries. We're restriking contracts, and that's great in terms of for our shareholders. But there is a bigger issue, which is about the sustainability of the market, and it needs to get some sort of equilibrium back. And at the moment, there is a shortage of gas, and that's causing this problem. So it is a challenging time in that regard. But as I say, we have when we our model, as you know, Jeremy, is that we've been through the pandemic and dealt with it very, very effectively, and we've delivered very good results. We will be the beneficiaries of some higher prices, which will be feeding into the model going forward. But overall, our model is one which is very defensive, lots of regulated revenues, and an area where investors can get very attractive risk-adjusted income. And that's what we expect to continue in the future.
Okay, one final question picks up on that point about looking out from here. Anything we should know about in your plans for this coming year which could help or hinder the business? I mean, obviously you're being buffeted as well by outside forces which are beyond your control. Is there anything coming up in the next year that you think investors should be aware of?
I think overall there are issues which are not unique to the solar industry. So there are supply chain issues. So there's some certainly inflationary pressures on solar modules at the moment, which is we're not actually buying modules at the moment. So for us, it's sort of okay, but that needs to be obviously transitory, because you don't want those prices to keep obviously going up. And that's partly a function obviously of coming out of a very unusual situation with the pandemic, and you've got supply chain issues are appearing across the world, aren't they? So it's not unique to solar, but that's certainly something to keep an eye on. But I think overall, there is a significant, a lot of very positive, particularly on the policy, as I mentioned, policy measures, which are very, 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 very positive. And also just to note that as a fund, as a strategy, in a slightly higher inflation, in fact, in an inflationary environment, our earnings increase. So we're very good. Not only is it a nice income producer in normal times, but in an inflationary environment, we are also, our shareholders would be the beneficiary of higher earnings. So I think that's something to note. But overall, There's always challenges, but overall, I think the opportunities still remain are very strong for the company.
How about the potential for higher interest rates over the next year as well? Because that's something else obviously comes with higher inflation, the prospect of an increase in interest rates. They're record lows at the moment, let's face it. But we are possibly pricing in something like a 25 bips rise in the next year or so. How's that going to affect Bluefield?
Well, I mean, there is on a valuation basis, you need to see whether there's any impact at that level. It won't have any impact, particularly in terms of discount rates. But I think there is very, very clear sort of water between those sorts of whether interest rates and bond yields at the moment and the 6.5%. Or the 8.12 pence, I should add, in terms of 8.12 pence per share, were our forecast earnings for the current financial year. There's a significant premium that we're offering our shareholders, and so I think in that sort of at that level, the outlook still remains very, very positive for a company like Bluefield Solar.
Long may the sun shine and the wind blow. James, thanks indeed for joining us. It's a pleasure. Thanks for your time. James Armstrong is Managing Partner at Bluefield Partners, the investment advisor at the Bluefield Solar Income Fund. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.